Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, September 30th. As we start the video here, as always, I encourage you to run the video player at 1.25x. I think you'll find that the right speed. Taking a quick look at futures, we've had an overnight ramp. Not to a large degree, but it looks like they're fading it here early in the pre-market. Was a lot higher when I got up this morning, but looks like they're backing off a little bit. I don't know a particular reason why they ramped it overnight. Maybe because the stopgap measure to keep the U.S. funded was passed last night by the House. Which I think takes it up to December 15th. But, of course, it has to pass the Senate before it works. And I guess there's some controversy whether that's going to pass or not in the Senate. So, more drama there. They'll get it done. I'm not worried about that at all. ES is up about 0.5%. Same with the NASDAQ. Small caps up 0.8. Oil's flat. Nat gas is up 3%. And just a fun fact for you on nat gas. Here in the States, nat gas is trading around, $5.50. I was reading some stuff over in Europe. They've gone into panic mode as they enter approach winter with natural gas storage at basically all-time lows. The cupboard is bare over there, and they're scrambling. Each country is bidding against the other to get, their nat gas storage up to speed before winter. So they're paying roughly $30, where here for the same amount of fuel, I don't know how that's measured. I think it's in billions of cubic feet. I'm not sure. We're paying $5.50, so you can see the dramatic difference between what we're paying and what Europe is paying, and Asia is even more, believe it or not. We got a loaded day on macro. We got GDP and jobless claims at 8:30. That GDP print will be obviously pretty important. Chicago PMI, nat gas inventories. I think Jay Powell and Yellen are back up on the hill today. Don't quote me on that. And we've also got like a half a dozen Fed speakers today. Over on the earnings front, we've got CarMax, Bed Bath & Beyond, Paychex, and McCormick all before the bell. Got a pretty nice mix there as far as cars and retail and consumer staples, etc. Now, one thing I wanted to point out, and we haven't looked at it in a few days, is the U.S. dollar. Big breakout yesterday. You can see here we had a line of resistance that held all the way back from April. And so we had a little peak above on, what was that, Tuesday. And then we had a big move on Wednesday, yesterday. Now, we've been following along these different regimes, and if you're new here, first of all, welcome. I'm glad you're here. If you jump over to the show notes, you'll see a place where you can register for all my content. That way, you'll get everything that I do, whether it's a YouTube video, a trade alert, a market observation, morning, noon, and night. You'll get it right in your email box. And here's a little extra information for you on the registration process. We'd love to have you here. And you'll also get an invite to our trading room, where we'd also appreciate you coming and learning what you can learn or interacting with the other traders. It's a nice place during the day. Lots of good ideas, lots of good trades. So let's just review what a rising dollar means for different asset classes. and these are all in general. In general, a headwind for commodities, for oil, etc. Generally a headwind to precious metals, a headwind for multinationals. Why? Because you're selling something and then you're bringing it back to dollars. You get less dollars on the way back. If you're selling in Europe and then you got to bring those monies back, your exchange rate is working against you. And also EEM, I'm going to show you a slide for that. Emerging markets does not generally like a rising dollar. What is it good for? It's good for cyclicals. It's good for small caps. It's good for mid caps. Why? Because they don't have the dollar exposure. Most of your mid caps and your small caps are all domestic companies, so they don't have that exchange rate issue. So that may be a tailwind for those specific sectors. Now I wanted to show you the EEM chart. Pretty interesting. We had a level here at 5150 and we've lost that level, and you can see we are right down on a ledge of support with relatively large voids beneath. So you've got a clear level there at 50. If you see a breakdown there, I think you can be short EEM with a stop just above, and then you'd be looking for 48.50 for starters, and possibly all the way down to 47 as a first target. And then below that, I think the ball would really be rolling down towards 45. So if you're interested in trading EEM, there's a trade setup for you. Of course, we've been hyper focused on rates. We've had a massive move from 1.3% up to 1.54%. Fast move, headwind for bubble stocks, tech, ARC, all those names we've talked about. Your Teladoc and your Zooms, 52-week lows. So any kind of big tech name that doesn't have earnings support is going to have trouble in a rising rate environment. And that's exactly what we have. I expect some stabilization in this new band, but if it takes off again, then you'll probably see NASDAQ and those bubble stocks heading to the downside, leading to the downside with possible broader implications for equities. And here's TLT. We've been talking about this potential short on, if you're in at this point. If you're not in and you got a little kickback rally towards 147 and the 200, you can see coming in here, I would expect that to hold at this point, and then for rates to head higher, TLT to head lower. VIX, we're in this range right in the middle between 20 and 25, trading about 22.50. I think in this range, you've got to have an abundance of caution. And what you're looking for on the VIX is trend at this point. Is it trending lower towards 20, or is it trending higher towards 25? Obviously, a breakout above 25 is going to cause a lot of turbulence in equities. You're probably going to be seeing a lot of red on the screen. But if they bring it down towards 20 and then break below, that'll be very, very positive for equities. Still nothing on the McClellan oscillators, right in the middle of the range. Not really predictive. And yesterday, we really had no major technical developments. We basically just treaded water. There was a few instances of attempted rallies that were faded. If you were actively trying to trade the indexes yesterday, you probably were fairly frustrated because every nice green bar was met with a equal or bigger red bar. So there was just a lot of chop yesterday, and you can see that we're on a 33 cents, 0.2%, nothing really going on. So on the equal weight SPY, I would continue to focus on 153 as more or less a breakout level, that if the equal weighted SPY can recapture all the moving averages and break back above, that would be obviously bullish. And the downside level to watch is this 150. A break below that opens up the door to retest the prior lows. And this candle here was, remember last week with Evergrande. That's what caused this. So moving on to SPY, I'm going to move rather quickly. I know I always say that, but in this particular instance, I think it's going to be accurate because really nothing happened yesterday on a technical basis. So for SPY, I would continue to focus on the 50 EMA, this downtrend resistance, and the overhead gap. Any kind of a rally in here has the potential for being faded. So I think really in order to start getting excited or optimistic about the upside, you've got to break above this downtrend line, and you've got to come back up into here. 440 is not only the gap, but it's also where the 50 EMA comes in. And you can see that a lot more clearly here, where we made some tries yesterday to break out of 436, and you can see that all those attempts were rejected, and then we closed near the lows of the day. So 436, 438, and then 440 on the way back up will be resistance levels. And on the downside, you don't want to see yesterday's low taken out, because then that would open up the door to 432 and possibly this prior low down at 428.75. And here again, same levels. But what I wanted to show you on this one is look at the classic bear flag look. Here's your impulsive leg down. Here's your consolidation and a bear flag, and then a break below. Now, if we open higher this morning on the gap up from the overnight move, just remember that, say we open, I don't know, 436.50, and we've got $1 or $1.50 gap below, I would expect them, or my base case would be, that they flash lower and fill that gap, and then really decide what's going to go on after that. The only thing that would throw a monkey wrench in that is, remember, we've got GDP and jobless claims at 8:30. So in a couple hours from now, you could see, potentially a pre-market moonshot or a pre-market nosedive based on, those figures, jobless claims and GDP. So there's going to be a lot of things in flux before the regular market opens at 9:30. But I just wanted to point out this classic setup that if it projects out, you take this length here and add it to the bear flag, you've got a number that's below this prior low. And if that were to play out, we go lower. It's just as simple as that. So be aware of this setup, and we'll see what pans out today. Qs. This is where we've seen most of the pressure. And you can see here that we closed below the low from the other day. So I think this 360 remains in focus as a key level, because when you look back in the chart, support is starting to fall away as we move below 360, and that's where things can move quickly. On the upside, look for this gap entry and keep your 50 EMA in focus. And here you can see on an exploded view, you've got resistance at 364. You've got the gap entry 365.70, and then you've got the 50 EMA coming in at 368. So, we could have a kickback rally into the 50, but yet still not close this gap and run into downtrend resistance. So, long story short, there's a lot of wood to chop overhead in order to get kind of back on the right side of the charts. So today, I think your major pivot remains 360 for active traders. I think below that, you've got to be looking to the downside. If we break above and hold it, then the door opens for a move back up towards 364. 30-minute chart, not a lot of value here. Just the same levels that we just talked about, just in a more exploded view. IWM, we had this impulsive move off of 214, got into 227 where it rolled over. You can see yesterday that we filled this first gap. So I will be removing that in subsequent videos. But look how the tail of this candle reached down for a perfect fill of this gap. And so for active traders, gaps are always very, very important. You can see that usually on first touches, the top of the gap will hold, as it did here on this first candle. Even on the second candle, we had a touch of the top of the gap, bounced up again, and then third candle held, fourth candle filled it. So the more times you tap on the top of a gap, the higher likelihood that you're going to get that fill. And that's what we saw yesterday. So on IWM, I am keying off the 50 EMA here at 221.86. Call it 222. You get a break back above 222. I think you got a good chance for a bounce higher. You can see it here. We've got a level, and in the dark brown are the Fibonacci retracements of this impulsive move. And you can see that yesterday, we just sat in a very, very narrow range. I tried a couple trades and more or less threw up my hands and said, you know what, just too choppy. So today I'll be looking for a breakout above this little line of resistance at 222, where the 50 EMA comes in. On the downside, 221, 220.50 are going to be pivots to the downside, where you see we got room down to 219.50 and then 218, where this other gap is. You can see here on the PPO momentum, while still in the bearish regime, is starting to curl up. And if price comes up and these start to rotate higher, you'll get a breakout of RSI above 50, and you'll start to see PPO roll up and go higher. And those would be bullish developments and be supportive of moves higher. As we roll through FATMAAN, for the most part, there's nothing happened. I think on Facebook, we're on the daily chart. You want to key off of this 336 area. If we were to break down, I think you come down here to the 200 really quickly, down to 325, and it would be my guess that on first touch of the 200 at this key support level, you get a reactionary bounce at a minimum, and then we'd have to see what's going on in the broader market at that point to see if it was one and done, a V-shaped bounce off of the 200, or if it bounces and rolls over, or just kind of hovers here above the 200. But I wouldn't expect the 200 to just give it up right away. I think there'll be either a stabilization or a pretty nice bounce. So, long story short, if you've been short Facebook or get short at 336, I would be looking to cover into 325 or even a little earlier. I mean, that doesn't look like a big move, but it's $10. So that's a worthwhile trade to pay attention to on the downside if there's some kind of, follow-up selling to what we've seen so far. Apple made a little progress, but you can see we've got a couple of gaps above that need to be filled. We've got some downtrend resistance that I dropped in just for some visual reference. And we've more or less tested this prior low. I mean, I think, we fell 25 cents shy of this low here, but that's your line in the sand, 141.50, that if you get a break below, you're going to see some follow-up selling. And just for the benefit of any new viewers, I'll go over the daily chart really quickly. We've got uptrend support, lateral support from this breakout area, and we've got the 200 all coming in at 136. And so if there's another breakdown, you'd see Facebook reaching for the 200. You'd probably see Apple reaching towards the 200. And my same comments apply. If you were short, I would be covering into 136, even maybe a little bit before, and be ready to reverse long at that point. and you can stay long against the 200. That'll be, coming up, and I expect this to hold, especially on the first move into that level. You can see back here in the chart, first move, bounce, came back to check it again, held. First move, bounce, came back to check it again, held, etc. Way back here in the chart, it was one touch of the trend line, then higher. So whenever you're approaching support, whether it be a gap, whether it be a moving average, whether it be a back test of a breakout, the first touch usually holds. And in this case, you've got a triple layer. You've got the uptrend, you've got the lateral support, and you've got the 200. So there's a lot of support coming in at 136 on Apple. Tesla has been pretty much immune to this selling, so there's a lot of relative strength going on in Tesla right now. We got the breakout above 760. We got a big impulsive move up into the high 790s. Pull back to 770. Reaching up towards the highs again. Coming back to 770. So now we're in the range. But it's pretty wide. It's, $20 wide. You can make some hay if you can buy 770 with a stop just below, then your target is the top of the box. And if you get that breakout of 790, then you can reach towards the highs of, high 790s. And probably on this breakout, you'd go beyond 800. And I just saw it here, so I'll point it out. Look at the double bottom setup here. There's your first bottom rally. There's your second bottom. You've got double bottom here at 770. So if you get the breakout above 790, your measured move is going to be $20, which would put you up at 810. And I will tell you, there was a ton of call buying in Tesla yesterday for the 800 calls for tomorrow. A bunch of them. Now, you can take that for what it's worth, but if you got that breakout of 790 and you weren't in already, I would be a buyer there, because I think you'd get a push, a fast push, at least to 800, but on a measured move basis towards 810. So I think that would be a really nice trade if you got that breakout. Microsoft, 60-minute chart, very weak. Multiple tries to break out above 286, which all ultimately failed, and closed on the dead lows, 284, 283.50 is support here. Again, that looks like a classic flat flag to me. Here's your impulsive drop. Here's consolidation. And so if you get a break below 283.50, I think you got to be short. And let's look at the daily just to refresh our memory, since we've got some time. We broke out above the rising channel. Whenever you go outside of a trading range and then you come back in, that's a bearish move. the target becomes the opposite side of the trading range. So on this break back into the channel, your target is the bottom of the channel, right? And you can see a kickback rally, could not get back above the channel, rolled over, lost the midpoint, and now we're down in kind of like no man's land as far as support goes. You can see this void in the chart here, and even bigger void down here. So unless Microsoft can get some closes back above 288, just eyeballing it here, it's going to be vulnerable to coming down to the bottom of the channel here at, let's just call it 275. And then, like in these other instances, top of the channel, bottom of the channel, top of the channel, bottom of the channel. That would be constructive technically and kind of what you'd expect over time, right? The channels are there for a reason. And so fulfilling this kind of move down here would set Microsoft up for the next leg higher. And that would be another place where I'd be looking for a long. And then if you got stopped out of that long, you're going to come down here to the 200 at 260 for a tag, right? So if that happened, you'd see Apple at the 200, you'd see Facebook at the 200, and then you'd have Microsoft at the 200, and then that would be the major test at that level. Amazon is already at the 200. I went over to the daily chart. The 200 EMA comes in at 32.90. So we are right there. Plainly put, it's got to hold. You drop below the 200 on Amazon, you're going to be coming down with this measured move. We got the move down, the bear flag, break of the prior low. You're going to be coming way down towards 3,200 to fill this gap. So, time to stay on your toes on Amazon and a lot of these names. And, from a technical standpoint, we're not even talking about, super active trading. If you're a swing trader on the daily time frame and you get a setup where a stock, any stock, loses the 200, you got to be looking lower. And that gives you a clean, objective setup to where you break 32.90, 200 day, you get short and you put your stop just above. And then that way you're shooting against that 200 with a very high probability that you go lower. So that's a great setup for any of you swing traders out there on Amazon. And I know those options are expensive. And if you're not comfortable with that, just don't do it. But if you are comfortable with that, then I think this is a great or potentially great setup. And even for those that are more bullish, there's no more bullish place to buy than sitting on the 200. Why? Because it's supposed to hold. The 200 is supposed to hold if the stock you're trading is in a bull market. And once you lose the 200, it's not by definition. So if the market and the Amazon in general are going to hold it together, this 200 should hold here. So time will tell. Google, first sign of relative weakness. Why? You had the big gap down. You lost the prior low. This was the Evergrande drop last week. We put in that low and bounced up to downtrend resistance. But then on the next drop, it went right on past the prior low. We put in that little bear flag look, and now it has broken down below that level. So Google is farther along to the downside than the other examples, because in the other examples, we haven't exceeded the prior low. So now Google finds itself sitting on a $50 gap, literally from 26.80 down to 26.30. So active traders, swing traders, you see a break of 26.80, right in that range, you can get short for a gap fill down here and possibly even lower. So critical spot on Google today at 26.80. Netflix, nice relative strength. Why? Here was the prior low, way down at 570. We got an impulsive move up yesterday. Big impulsive candle to break downtrend resistance. Broke back above this 597.50 area where the prior highs were, and made a big reach up towards 610, where it has subsequently backed off right back into this support area. If this breakout is for real, this should hold here. If it doesn't, you may come back to this trend line where it might see support. But as long as price holds 597.50, I'd be looking for higher at looking to the prior highs at 613, and at that point we'll be challenging these highs back here, and you get a breakout above 613, you're in blue sky territory. So Netflix is showing some nice relative strength amongst all this weakness. Lastly, let's wrap it up with semiconductors. Going back to the daily chart, just to give you the big picture. Giant trading range, $35 wide. Nice uptrend channel. But now we've dropped below this 258 breakout. Simply put, this is a bearish setup back below this 258 breakout, and we've seen it before. We saw it here, fake breakout. We saw it here, came back inside, and now we've seen it again. I think just from a technical standpoint, 258 is the key. You get a break back above, and certainly a break back above 262.50. You want to be long there, but as long as it stays below 258, you've got to be looking to the downside. And so if you're bearish, you've got a nice setup here where you can stay short against 258 or even 260, and then see if you don't get a move down towards 248 back at these levels. And you can see that was a big level going back in the chart. So if there's more weakness, then I would expect semis to go lower. And it's also interesting to point out, look where the 200 is coming in, 242.50. That was this area down here was important. There's a prior low there. So if we see more weakness, and we've got, Apple, Facebook, Microsoft all diving to the 200, I would expect semis to be diving to the 200 as well. So we're at a spot now in the whole market where we really need to see some stabilization at a minimum. A good outcome for the bulls would be to stop the bleeding here, stabilize, and start grinding higher to recapture those 50 EMAs and to close some of those overhead gaps that are above. Obviously, what you don't want to see is follow-up selling after we've had a day or two of consolidation, because then it will look like all those bear flags that I pointed out are executing, and then we've got to look much, much lower. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.